Hello everyone and welcome back to another video. As you know, I love cryptocurrencies and I want to share the love to you guys. But first of all, thank you for all the people who have subscribed and supported my videos. If you aren't subscribed to the channel yet, please don't hesitate to hit that subscribe and like button. It helps out the channel a lot and motivates me to make more videos like this one. Today we're going to talk about cryptocurrencies. Bitcoin is a type of cryptocurrency and which is very popularly traded. Actually, it's the most popular traded currency because of the recent price changes of it going up and down. Today we're going to talk about how cryptocurrencies are formed, when were they invented, and what were they originally used for. But before all that, please make sure you hit the like button. It really helps me out. Thank you. Let's talk about when cryptocurrencies are formed. Cryptocurrencies were officially formed in 2009 by a Japanese computer scientist who made Bitcoin, the most popular crypto on the market. But it wasn't used for people to invest in. It was used for people like you and me to pay each other. It's decentralized, which means it doesn't have a server, meaning that if I wanted to send you money, I could send new money without a third party like a bank coming in. No government or state official controls it, which makes it very easy to access. It's like Venmo of nowadays. So say I sell you a computer and I don't want to wait 2 days for the bank for you to go to the bank and bring your stuff. You can just Venmo or Cash App it to me. That's the same thing. Bitcoin was originally used for the same thing, but it went a different route. People started investing in it. But there's not Bitcoin isn't the only one cryptocurrency. There's over 6,700 different cryptocurrencies, meaning that it is a very volatile market and could go down. But we'll talk about the volatility later. Let's talk about how Bitcoins are formed. So you might have heard about companies that are Bitcoin miners. Bitcoin miners basically add to the blockchain, and the blockchain is the encryption to make sure that no Bitcoins have been stolen. Meaning that if I send you a Bitcoin, it doesn't go to some Joe Schmo. It has to only go to you and no one else. That's why the blockchain encrypts the string of data that I send to you. And companies who encrypt this are called Bitcoin miners. So every block that is encrypted of data, they get a brand new Bitcoin, one Bitcoin. And eventually, in the year 2140, there will be 21 million Bitcoins, according to Yahoo Finance. But enough of the miners. Let's talk about how you can start investing in Bitcoin or any other cryptocurrency. So, say you don't have the money, which a lot of people don't want to spend $30,000 in one cryptocurrency. You can invest in funds, which I have a video about, and it'll be linked down in the description below because I don't want to waste valuable time on this video. But you guys should check that out because it's a very low price right now. Funds are where you can invite partial dollars, like 30, 40 bucks into one of these cryptocurrencies and expand your portfolio. Or if you want to take the bigger route, you can go to Robinhood or Webull to invest in Bitcoin, Ethereum, or Dogecoin, which Dogecoin has went over 800% in the last week, which, wow. But what makes Bitcoin and these other cryptocurrencies unvaluable? Basically, there's a lot of them and it works on supply and demand. As I mentioned before, say I have a gold bar, or we'll talk about Bitcoin. So say I own half of the Bitcoins in the world, right? And I decide to sell half of my share. Well, there's so much more Bitcoins available now. So the price is going to drop because the scarcity is less. But there's a catch. Say I buy even more. Say I own half the Bitcoins in the world and buy even more Bitcoin. So I own 75% of the Bitcoins in the world. That's only 25% less. Then the price is going to jump up because of the scarcity. And when people buy and sell Bitcoins, like in hundreds and thousands of Bitcoins, that really affects the prices because there's more Bitcoins available. They're less valuable. And eventually, when Bitcoin becomes high enough, everyone will sell it off, which means the price will just go all the way down. That's why it's a very volatile market. And I feel that until there's not a fixed amount, because as you know, miners make more and more Bitcoin. So every Bitcoin, one Bitcoin, it's like 15, 20 Bitcoins every hour getting produced. So it's like 15, 20, 15, 20. That adds up to become a lot of money. So I feel that it's a very volatile market, but if you're smart enough, it can help you out. Would it be safer? And there's a fixed amount of, oh yes, it's like a stock. If there's a fixed amount, you know how many there are. But Bitcoin, there's like things come out of thin air after mining. I feel that when there's a fixed amount, your money's more safer. This is the highly speculative. So you have three levels: low risk, medium risk, and then high risk. And this is high speculative. That means it's even higher than high risk. So it's a very risky thing, and I would not recommend if you're just starting off to put $30,000 into crypto. You diversify your portfolio, but of course put some in crypto. I know people are just starting to warm up in crypto, and crypto is amazing, but it's a very risky market. So it's high risk, high reward. It's like when you're playing a sport. When you go for a shot, like in tennis, and you hit and you know it's a high risk, high reward. So either you're going to come up with a high risk shot and miss it, or it's a high reward and win the point. Life is like that. And to my last point, let's talk about the different trading platforms that you can get Bitcoin on. So TD Ameritrade, you can only buy Bitcoin trusts in. And Bitcoin trusts are in a short notice. They're just trusts that you put small amounts of money in, and they put in Bitcoins for you. So they take up a large pool of money from a lot of people and just buy Bitcoins or any other cryptocurrencies. But if you actually want to buy actual Bitcoin, you can go to Webull, Fidelity Investments, or Robinhood, and you just have to search them up on Google. Isn't that it's not difficult? And just sign up an account. I know Webull's giving $100 in stocks away when you deposit money into it. So go check them out. Well, that's it for today. Thank you and have a great day. Safe trading. Don't be too sure with cryptos, and make sure you make it. That's it for today. Make sure if you like the video, please like, share, and comment. And please subscribe to the channel. It really helps us out. Have a great day. Bye, guys.